Welcome back to another episode of Rapid Alpha, the show where every single week I break down the biggest events of the week and my personal research to deliver you in a 20-minute show everything you need to know in this week of crypto. This week there has been a lot of news that has broken and a lot of controversy across the entire space. Today we had news that DCG is potentially selling their assets, so I want to go through exactly what is going on with one of the biggest conglomerates in crypto, Digital Currency Group. I also want to talk about whether the contagion could spread even further following the FTX collapse, with DCG possibly on the brink. How could this affect other projects? How could this affect the market going into Q1 next year? I want to talk about the Binance FUD. Is there any truth to the current FUD going around about Binance potentially being insolvent? And then I also want to talk about SBF's arrest, which was also big news this week. And of course, at the end, I'll give a market update off the back of CPI and FOMC. One of the craziest weeks we've had in recent times in crypto. The prices have been extremely volatile. We saw a massive dump today off the back of some of this DCG drama. So we're going to get into all that and more in today's show. Before we get into the alpha, remember to subscribe and turn on post notifications if you haven't already. I do this show every single Saturday at 8 a.m. EST, 1 p.m. UK, or 12 a.m. Australian time. This show's going up an hour late today because I was just piecing together the last bits of information for you guys. But remember to turn notifications on so you don't miss these shows. I've been a little bit inactive on this channel. I'm now getting back into consistency of uploading every week. So to make sure you don't miss it, turn on post notifications. All right, let's get straight into the show. There's a lot to talk about. The first topic I want to run through is what is going on with DCG. If you guys don't know what DCG is, it's called Digital Currency Group, and it's one of the biggest conglomerates in crypto. They essentially have four main businesses. The first main businesses being Genesis, which is the lending arm. So they have a service where institutional clients and retail clients can essentially put up their assets, where Genesis lends them out to earn you yield on your deposits. They have Grayscale, which operates the Bitcoin Trust, which is available to purchase through the stock market, which allows you to purchase Bitcoin through the stock market with the ticker GBTC. We have their CoinDesk business, which is their media business, which obviously posts media articles. Funnily enough, they were actually responsible for leaking the Alameda balance sheet, which led to the FTX collapse, or at least the beginning of the FTX collapse, which is quite interesting considering DCG was inherently affected by that collapse, and also Foundry, which is an advisory company as well. And they also make a lot of their own investments. But why is this important? Why is DCG important to talk about today? Well, they have exposure to a lot of different assets across the crypto market. They hold a wide portfolio of assets. They hold a lot of Bitcoin. And if DCG goes down, there is a lot of ramifications, potentially huge contagion that could spread throughout the space. So it's very pertinent at the moment to talk about their current situation. Now, if we look at one of their main product offerings, which is Grayscale, the Bitcoin Trust, we can see that currently they are trading at a massive discount to the NAV, which is the net asset value of the Bitcoins that are in the underlying portfolio. Now, why is this the case? Well, first, I want to give you a little bit of a history lesson. Basically, why DCG is currently coming under scrutiny is because back earlier in the year, they were very intertwined with 3AC. So what Genesis was doing, one of the subsidiaries of DCG, was lending money to 3AC for 3AC to buy Bitcoin to deposit into the Bitcoin Trust, which they would essentially use to arbitrage to earn money on top of their investment, which Genesis would get a 2% management fee of. So if Genesis lent money to 3AC and 3AC deposited into the Bitcoin Trust, then there was more assets in the Bitcoin Trust. And with Grayscale taking a 2% management fee of the Bitcoin Trust, they were earning money off lending money to 3AC. So they're incentivized to keep lending. And there was essentially this big flywheel of lending back and forth between Genesis and 3AC and Genesis and 3AC. But what actually happened was 3AC collapsed. And this left a massive hole in the Genesis balance sheet, because when they collapsed, they could no longer pay back the loans to Genesis. Now, this left a $2 billion hole, which they eventually had to write off. I think it was $2.4 billion. Now, what happened is they wrote this off back in June and everything seemed okay. So everything seemed fine at Genesis. Actually, no one even really knew about the extent of the write-off until FTX, because what happened with the FTX collapse was it really highlighted just how dangerous centralized exchanges were, and a lot of the public started to panic and withdraw across centralized lending platforms across crypto. So it wasn't only FTX people were withdrawing from, but also Crypto.com and KuCoin and other exchanges, and Genesis was one of them. being one of the major centralized lending players, with other lending players like Voyager and BlockFi going down, people just had a lack of trust in the space. So FTX was the final nail in the coffin, because what happened was, with everyone withdrawing, there was essentially a bank run on assets, and Genesis being a major lender, it didn't have enough assets to cover the amount of withdrawals. Like, in traditional finance where you have the banks, obviously the banks don't have one-to-one deposits. If you put $100 into the bank will take, let's say, $95 out of that 100, and it will lend it out to clients, retail and institutional clients, to earn yield, and they'll keep just some liquid so they can process some withdrawals. But if everyone tried to withdraw their money from a bank at once, they couldn't pay it out. But what the banks have is something called the Federal Reserve, where they can loan money in order to pay out back to people that are trying to withdraw. But with Genesis and with crypto, they don't have this backstop. So what happened was, a lot of people tried to withdraw at once, and they couldn't pay it out because they weren't liquid enough. And you can't really just start recalling loans. And also, they had a $2 billion hole in their sheet because of the 3AC write-off that they had to make. So they were already under strain from a balance sheet perspective. So essentially, they ended up being extremely illiquid. And with the discount to the GBTC getting worse and worse and worse, this obviously affects their bottom line, because Genesis were big buyers of the Grayscale Bitcoin Trust, and they were the ones actually defending the peg, so to speak, or their NAV when it first started to drop, in order to kind of get it back to a premium. Now, there's many reasons why it's not trading in a premium, and that's something for another video. But essentially, what this has resulted in is a very tricky situation for DCG, and they really have a few options. They could essentially declare for bankruptcy now, which would mean that they are having to repay their loan to Genesis. If you guys don't know, DCG also loaned $1.5 billion of Genesis. They were extremely intertwined, just like 3AC was. So that could be recalled if they declare bankruptcy, so they need to raise capital. And then the second thing that they could do is also fire off some liquid assets to try and restructure, move different funds around, and try and restructure the whole DCG and Genesis structure in order to kind of make creditors whole, at the same time keeping the company alive so they can keep making money. Because the way Genesis makes money is by loaning money out, earning yield on that. If that product is then removed, then the entire company doesn't make money. Because if we look at DCG, really, the business itself, Grayscale, I mean, it makes its 2%. But apart from that, all their money, basically, CoinDesk doesn't make much. It's all from Genesis. So there's kind of rumors, will they have to wind down the Grayscale Trust? Will they kind of wind down Genesis, which looks like is almost inevitable at this point? Well, they only really have a couple options. Now, what these options, what the current price action is alluding to, is that they could potentially be selling off assets to either file for bankruptcy or restructure. And both those scenarios lead to the potential sale of assets. So if we go into their portfolio on Masari and look through some of their most commonly held assets, we could see that the coins that DCG owns are much, much, much more down today than the rest of the market. Now, obviously, the whole market's down today, but Filecoin's down a lot. Ocean Protocol's down a lot. Flow's down a lot. Near's down a lot. I mean, Filecoin was down like 30% when it wicked down this morning. This could potentially be alluding to them selling off their assets to either restructure or because they need to pay back the loan because they're filing for bankruptcy. So there is a lot going on with DCG now. I would just urge you to keep your eye on these assets, and maybe maybe this Contagion could spread further, because if we look at DeFi Llama and we look at the raising rounds that have taken place this year, we could see DCG are major investors in a lot of these small caps. So ARK's one of them, Mural's another one, Volair Finance is another one, Blockchain Association. We can see all these public records of DCG investing, CoinMe, Circle, Cefello, like all these smaller projects that DCG has invested in. These could potentially be infected as well as their principal holdings, which we know include a lot of larger caps. So just watch out here, because if they do actually end up filing for bankruptcy or they restructure in a significant way, then a lot of these could be sold, and we could actually see right now a lot of sell pressure hitting the market. Now, this doesn't mean this is actually happening 100%. There's no way to prove that they are actually dumping their assets. It's all speculation. This just could potentially allude to some big news coming out this week. And I do think we are going to get some big news on what DCG's plans are, because right now we're in limbo. We have a whole lot of people trying to withdraw money that can't withdraw money, and something is going to have to happen here in order to come to a resolution. But this dump didn't happen in isolation. It wasn't just like just DCG assets were firing off. No, it was the entire stock market that corrected after Jerome Powell came in slightly hotter on the hawkish side than a lot of people expected. So CPI actually came out under expectations, which is good. It means inflation's trending down. This resulted in a big pump, not only from the stock market, but from Bitcoin, because people were like excited. Yes, inflation's trending down. Maybe that means the pace of rate hikes is going to slow. But then Jerome Powell came out. He said a few lines which were quite hawkish, alluded to sustained rate hikes. The dot plot was updated in a more aggressive fashion, and subsequently the stock market pulled back. What happened as well is Bitcoin, although breaking out initially after the CPI, it also pulled back off the back of Jerome Powell's kind of statements here. And it just looks like the road till the rate hikes ending is just extending a little bit more than the market would have liked. And it doesn't look like a pivot will happen right now, which means we could potentially extend downside into Q1, Q2 next year. Which has kind of prolonged the horizon here on these rate hikes. So that's one of the major reasons why the market pulled back. Obviously, DCG's holdings got affected the worst because either they are selling or it kind of became a self-fulfilling prophecy once they started to have rumors online about them selling them. Other people were selling assets that they found in the portfolio. That's also something that can happen, but just keep your eye on this situation. The other situation you should keep your eye on, and I know you guys have probably heard all about it this week, is the Binance FUD. I want to discuss if there's any truth to this Binance FUD, because a lot of people are saying Binance is the next exchange to go insolvent. Binance may not have enough funds to cover customer withdrawals. What happens if there's a bank run? There was a lot of FUD about withdrawals because people couldn't process USDC withdrawals over the weekend, and there was just a whole lot of mess. So let's just break down the Binance FUD, what I think, and let's look at some quantitative data to kind of back up where Binance sits right now in terms of its safety. Kim.com was one of the major people pushing this narrative, this Binance FUD narrative. He said the stories they share from the Binance insiders, former and current, paint pictures of Wild West lawlessness. I'm certain CZ and Binance have big trouble coming. Just a day later, we saw on Reuters, they released an article about a securities probe from the SEC into the BNB token, which is something that we've heard about for a while, but it just resurfaces again and again and again. Nothing new in that case, but that's kind of another headwind that started doing the rounds. Then we saw Mike Alfred come out and say, when the truth finally comes out about CZ and Binance, all the people on here who relentlessly hero worshipped him will suddenly deny ever supporting him, a story as old as time. Like he's basically alluding this to being the SBF situation 2.0. So a lot of FUD going around. We've seen screenshots of withdrawals not processing. You guys have seen it all this week. But then yesterday, Mazars, who's the official auditor who was proving proof of reserves for Binance, they recently just removed or discontinued their crypto auditing service as shown via their website. So it's very weird that the auditing company that was auditing Binance proof of reserves has now quit crypto audits. And a lot of people have been making jokes that that potentially Binance is insolvent, and also kind of spreading FUD in the crypto community, that one of the reasons why they may have stopped crypto audits is because of kind of the ugly picture it paints behind the scenes. So let's actually look at what is happening. Will there be a Binance bank run? Will there not be a bank run? Let's actually look into the stats here. So I want to look at, firstly, the stablecoins that have been withdrawn from Binance. We can see in terms of their overall scheme of deposits and withdrawals, this is a very small blip. This is the bank run everyone's talking about. A very, very, very small blip in the stablecoin withdrawals. In terms of Bitcoin, a lot more Bitcoin was pulled than other assets, but we can still see they have over 480K in Bitcoin reserves. So yes, it was a huge spike, but in the scheme of things, it wasn't a huge drop. I think what we do need is more transparency on the liabilities, though, because although they've established some sort of proof of reserves, although there was a small discrepancy, nothing too much to worry about. Yes, a small discrepancy. We do need proof of liabilities. CZ said that we don't owe money to anyone on a tweet, but we do need proof, and it's kind of hard to prove that, but they need some way of doing it because, they could be loaning money out. Potentially, I'm not saying they are. I'm just saying theoretically there's a scenario where they're loaning money out, and we kind of don't know where things stack up because although they may have assets, they may be collateralized and they may be loaning money against them. We don't know what their liabilities are. So that's very, very, very important to know. But in terms of pure reserves, we can see their exchange reserves look okay. And if we look at their wallets on the Nansen portfolio, so these are their public wallets that we can verify, we can see they've got over $55 billion worth of assets. So if Binance were to be bank run, they would need over $55 billion worth of withdrawals. Is it possible? Yes. Is it unlikely? Extremely. That is a lot of money that would need to exit the system for them to even test whether they were insolvent or not. Because, yeah, okay, let's say they have $55 billion worth of assets, and let's say they have $60 billion worth of assets on customers' dashboards. That means there would be a discrepancy of $5 billion in a hypothetical scenario like that. But that would mean that $55 billion would need to be withdrawn first before they could test the solvency of that final $5 billion. And that's why I think a bank run's unlikely, in my opinion, because it would just take such a massive outflow of liquidity to even test the situation. And by then, they probably do have time to get things together, even if they were technically insolvent. You got to remember that it would take a whole lot of pressure to actually test that threshold. Now, if we look at their stablecoin exchange balances, Binance did minus 2.5% worth of stablecoins withdrawn from the platform over the past 7 days. And this has been getting a lot of FUD. A lot of people have been saying, wow, millions of stablecoins are leaving Binance. Oh my God, there's a bank run. But let's just look at some of the other exchanges. OKX, 4%. Crypto.com, 9%. Bybit, 1.2%. Now, are people panicking about these? Are people FUDing Crypto.com this week? They were a few weeks ago, but no. People FUDing OKX? No, not really. They actually have more withdrawals on a percentage basis than Binance. It's just Binance has so many more tokens, dollars worth of tokens, that of course, in dollar terms, their withdrawals are going to be way higher than another exchange. But that's not relevant. If they have more dollars worth of crypto, we have to look at the percentage that's leaving. That is where the real risk is. And for me, I do think it's peak FUD. Now, Rand said the issue is, unless we see a huge bank run, we will never know if there are issues. I agree. There could be issues behind the scenes. We just won't know because it may never be tested. That's an issue. He says, I suspect that if there are, we won't know and the FUD will pass. I think this is a scenario that will take place, the FUD passing, that is. He said the other risk is legal action by the US. I do think there is a little bit of pressure from a regulatory perspective for Binance. I think FTX did highlight a lot of the flaws when it comes to crypto regulation, and it does seem like centralized exchanges will come under a lot more scrutiny in the near future. So definitely that's one thing I'm sure Binance is prepping for. But for me, the more Binance FUD, the lower I get to stack BNB. So, BNB is a token long-term I'm pretty bullish on. I wouldn't say there's that many altcoins which from like a DCA and HODL perspective, I'm comfortable holding long-term because, many altcoins, they're better narrative plays. They're better plays to get into and out of and kind of play the rotation game. When it comes to like long-term DCAing and holding, obviously Bitcoin's one that I hold. Obviously Ethereum's one. Even Matic I put into that category, but there's not many that fit into the bill. In my opinion, BNB does because it kind of has real tangible exchange growth and chain usage underpinning its token. So in terms of a use case perspective, it just has a lot going for it. It's kind of, you're killing two birds with one stone. You're getting exposure to the exchange. You're also getting exposure to the second biggest chain in crypto by TVL and volume. So there's just a lot going for the token. And yes, it's getting FUDed. Yes, it probably goes lower. Like most of the crypto market probably goes lower. But the more FUD means the more opportunity I have to accumulate Binance. And that's kind of why I'm not hating the FUD at the moment, to be honest. It's kind of weird to say that. But, BNB is a token that I think long-term is one of the better risk-reward holds. And yeah, I genuinely do have conviction in the Binance token. It probably lacks in utility in some aspects. I'll do a video in the future just on the BNB token. But in general, it's got enough scope to become a decent capture token of Binance exchange growth in general, if they kind of implement some of the things I think they'll implement. So I don't mind BNB, but anyway, that's just one of my, that's just like, I guess maybe an arbitrary comment. Maybe you guys are interested in hearing my thoughts on the token itself. Okay, let's go into topic number 3 of today, which is the SBF arrested story. Now, this happened towards the start of the week. It's kind of crazy that it happened towards the start of the week because this week, just so much has happened. Like, it started with the SBF arrest. Then the Binance FUD was just taking a complete hold of the attention. And then all of a sudden, we had Jerome Powell and CPI taking the attention. And then today, we've had DCG taking the attention. So it's crazy to think that this happened on Monday, but it did. And that was SBF getting arrested, finally. And essentially what happened was the US filed criminal charges against SBF. They said to the Bahamas, arrest this guy. The Bahamas officially arrested SBF after their formal notification. And the US is requesting extradition of SBF to the United States of America. But right now, he is in prison in the Bahamas, facing what is between 85 to 115 years in prison. that is a huge potential sentence, because he was essentially listed for wire fraud, conspiracy to commit wire fraud, securities fraud, conspiracy to commit wire fraud, money laundering, organizing a scheme to defraud investors, amongst many other charges. This could potentially land him in prison for 100 years. Do I think he'll go to prison for 100 years? No. Maybe he could provide information which leads to the arrest of others and he can get his time down. Maybe like good behavior as well could get him down to like 10, 15 years. Martin Shkreli only did 6 years, even though he committed horrible crimes as well. So we just don't know exactly the sentence that he's going to get. What we do know is that this will be a very long and drawn out process. I don't expect we know for a while the full extent of what was going on at FTX. I'm sure we'll get a lot of juicy stuff out of that and a lot more clarity on what actually went down. And also, this is going to be a very thorough case that the US is going to need to dedicate a lot of time and resources towards. It almost looks in many ways like a RICO case and not even like a financial case, just because it's so messy. Like they were doing their accounting on QuickBooks. They had encrypted group chats called wire fraud, discussing like secret company data, allegedly all sorts of weird stuff was going on inside FTX. So it kind of looks like a RICO case in terms of the way they're going to need to approach it from a forensics and investigative point of view. But yeah, he's facing a lot of charges, and that's going to be an interesting one to watch how it plays out. Right now, he was named a huge flight risk, so he did apply for bail, which was a $250,000, $250,000 bail in the Bahamas. He was denied. They actually said that because of his ADHD, because of his depression, because of his insomnia, that he should be granted bail or house arrest, so he could live in his Albany $40 million mansion and chill in the jacuzzi all day and play League of Legends. But that didn't fly in court. They didn't buy that argument, and they said, no, you're a flight risk. Unfortunately, we're gonna have to lock you up, and I'm sure the US was backing that decision as well. So he is now in the Bahamas Department of Corrections, apparently one of the dirtiest and most tough prisons in the world, until February 8th. So he's there until he faces extradition to the US. He's in the prison. Apparently his mum asked for him to be fed vegan food in prison. Apparently they've been making all these picky requests. Apparently he isn't even in general pop. He's in the hospital wing, apparently, away from general population, and she's saying like he needs his special vegan diet and all this stuff. I just love how they're making requests. Like the guy's in prison. It's kind of ridiculous. I've also heard stories about him complaining about the conditions and all sorts of stuff. Honestly, after defrauding investors of $8 billion, I don't think you can really complain, bro. I think you kind of need the time to reflect on your actions at that point. Today, there was more breaking news on this case as well. He was charged with violating campaign finance laws. So he donated $42 million to the Democrats and dark money to the Republicans, but there hasn't been a full list of politicians he paid until now. We got the list of who SBF gave money to. We see that mostly it was the Democrats, but also a few Republicans as well. And he was violated with violating campaign finance laws, which could just add to more charges against him, just add to the case against him here. Also not a very good look in Parliament to have all this data starting to come out. It's just not a good look from an optics perspective for Sam. Speaking of not a good look from an optics perspective, Kevin O'Leary has single-handedly ruined his reputation in the matter of 2 weeks, which is just insane to me that one man who was, I think, pretty well liked by the general population has just managed to flip things so on its head. And this is because it came out that he was paid $15 million to endorse FTX. If you ask me, that's the best $15 million Sam has ever spent, because this guy has been, hand on heart, fighting for Sam and fighting for FTX well beyond the end of kind of like the FTX collapse. He's been continuously pressing this pro-Sam, pro-FTX narrative, even in front of Congress, saying that Binance are the ones that put FTX out of business. Didn't make any mention of Sam's fraud or the mistakes or the dodgy stuff happening behind the scenes. No, apparently it was Binance's fault. So Kevin O'Leary doing his reputation a lot of damage, and it's surprising to me that for $15 million you can buy a man's loyalty for life. Potentially there is more going on here. Potentially he was making more behind the scenes. Potentially there are strings being pulled. There's threats potentially behind the scenes. This is all alleged. I don't know. I'm just questioning why he'd go out on such a limb here for Sam when clearly Sam's actions were wrong and clearly it's hurting Kevin O'Leary's reputation. So yeah, some of the sayings that he's been saying over the past few days, blaming Binance, going on the media, talking about how we need regulation. It's just kind of like, Kevin, just shut up. Just stop talking. That's kind of how I feel anyway. So just to wrap up this show, because we've gone through a lot, I just want to talk about my plan in the near future, because I get a lot of people asking me like, Miles, are you buying now? What are you doing? Is it time to buy? Is it time to DCA? I think the first thing I got to establish is that I don't DCA blindly. I don't just dollar cost average into the market every month with the same amount linearly. I don't believe in that. I have kind of my finger on the pulse. I have my ear to the ground. I know what's happening in the crypto circle because I'm very involved in the industry. I do this full time. I do this every day. I'm researching crypto all day. I like to take a more adaptive and a more kind of up-to-date approach to DCAing, which means I don't just put in the same amount every month. I kind of follow what I would call the Costanza rule, after George Costanza on Seinfeld, which means doing the opposite of what most people do and trying to buy with more size, like really, really red periods in the market, and also trying to take profits and exit during really, really bits. And this is a strategy that's really worked for me over the past few months. And it's also kind of boils down to not treating your Bitcoin and ETH the same as your altcoin. So when I look at Bitcoin, when I look at Ethereum, maybe you can chuck some of the bigger caps like BNB and Matic into this conversation as well. I'm really, really happy to just kind of buy them whenever and hold them long term because I know they're going to be around and I have extreme conviction in Bitcoin and Ethereum as assets. So assets that I put in that upper echelon, I'm very, very happy to just accumulate whenever and stack and hold for the future. But I don't treat my altcoins the same, guys. I'm a lot more adaptive with how I approach altcoins. And what this means is looking out for new narratives, maybe buying an altcoin, maybe rotating it to something else 2 months later, taking heavy profits when I need to, looking at quality dApps and researching teams of smaller caps and getting into them and then kind of riding their wave and looking out for the next trend. So with altcoins, I genuinely don't believe this kind of buy and DCA consistently over months and months and months is like always the best way to go, because the reality is next cycle we just don't know the altcoins that will necessarily succeed. Now I have a good idea of what some could be, but we don't know 100%. So it's just much safer to allocate most of my capital towards Bitcoin ETH and keep liquidity to enter new opportunities when they come to the fray. You don't need to feel FOMO, guys. I know when GMX was pumping, you felt FOMO. I know when DopeX was pumping, some of you felt FOMO. But what you have to understand is, though, there's always going to be new opportunities in the market. Those tokens, although they pumped, they weren't the first and they weren't the last. There are going to be many opportunities. For every token that pumps, there's another one that's just about to pump. So I don't feel the need to FOMO anymore. I keep liquidity. I keep a large percentage of my portfolio in cash because when one of these opportunities comes around, I want to pounce. For example, FTX, the day it collapsed, tokens crashed. They actually crashed a lot more than I thought was justified. So I bought some Ethereum, I bought some Lido, and I bought some DopeX. I even bought some GNS. A few weeks later, DopeX was up 100%. GNS was up like 100%. Ethereum was up almost like 50%. And I made some good profits, and then I can kind of bank some profits and rotate back into my stable positions and use that money to accumulate for the long term at opportune times. So I just don't believe in kind of saturating my portfolio full of random altcoins right now and just hodling and hoping for the best, because that's not the way to go. In my opinion, the way to go is to sure, pick sub assets which you DCA into long term. That's okay, but keep liquidity for new opportunities. And for me, I think the market gets worse next year. I can't give an exact bottom date, but I've been saying for a while that probably Q2, Q3 next year, that's when I'll look to go a lot heavier. That also lines up with my goals in terms of like some of the businesses I'm building, my income, all that sort of stuff, lifestyle. You kind of have to factor in when the right time is for you based on your risk tolerance, based on your goals. But I have conviction long-term in this space. So I kind of view mid next year as being probably a pretty good place to buy long-term. But that's just a kind of an estimate based on the stock market getting another leg down, which it may or may not. I suspect it will. I suspect most of you would also agree with me on that. But, I'm not an expert and I don't know 100% when it's going to drop. I just kind of follow my strategy of identifying new narratives, identifying new projects that I think can do well, keeping liquidity to get into those at the opportune times, taking profits, so not treating them the same as my Bitcoin and ETH, which have much longer time horizons, and not DCAing blindly. I hope that makes sense. I'm probably going to do a video on my strategy a little more in the future, so you guys can understand it a little more clearly. But I hope that kind of contextualizes experiences, how I think about this market and approach this market. But of course, if you're following me on Twitter, there's a link in the description to do that. If you're following me on YouTube, you're in the best place possible to get access to my research. This show is just one of them every single week on a Saturday where I want to share this research with you guys. So we covered a lot of ground today. Make sure you smash the like button if you enjoyed. Subscribe and turn on notifications so you don't miss another show. And let me know in the comments what you thought. Do you enjoy this style? Did you agree with what I said? Did you disagree? I'd love to have a conversation with you guys in the comments. And yeah, until Tuesday, that's when my next DeFi video comes out. I'm going to enjoy my weekend. I hope you guys do as well. I might watch Avatar 2 tomorrow. Some people have been saying I should watch it. So I might kind of relax, take a day off. And then, yeah, I'll be back on Tuesday for another video on the channel. And we'll do some more research into some upcoming projects that I'm looking at. All right, guys.